We're now going to turn to the global private markets. We are joined by Mathieu Chabran. He's the co-founder of Tikehau Capital. Tikehau is a global alternative asset management firm with more than 47 billion euro worth of assets under management. Mathieu, thank you for joining us here. I know that you're visiting New York in particular right now on a special milestone for your company. I do want to turn over to what everybody in the world of finance is talking about, which is, of course, where interest rates go from here. A lot of uncertainty. It matters a lot to your business and that of your rivals. Do you think that interest rates can get much lower from here, or is there upside potential?
I think it's only going one way, which is up, Sonali.
Really?
You know, I think that we are in the process of discovering, what is the new cost of liquidity under a Trump era. This is something that, shouldn't come as a surprise, just looking at both the, the program and, it's certainly very inflationary, being European, we'll see what happens, with tariffs. But on the other hand, I think it's great for our business, as we see, this new cost of liquidity and potentially some dislocations.
Do you think investors are miscounting here? Are they undercounting just how far interest rates can go in a Trump era? You did see a move higher in the 10-year, but do you think it should be much higher?
Potentially. And I think at Tikehau we've been consistent there, in this scenario where, and you and I, we had the opportunity, a few times to, to discuss that. And I don't know if it's a matter of 5% and, all the symbolic around that, or can it go higher? It always comes down to supply, demand, and to effectively the type of risk you are taking when you buy what is supposed to be a risk-free security. I think the world has changed somehow, and maybe the risk-free rate, is going up now.
On one hand, you look at the private credit world, and there is so much out there that's floating rate. Higher interest rates would bode well in that scenario. But if you have companies saddled with a higher cost of borrowing, then don't you have to worry about credit quality?
Well, there is certainly, part of that, but that will be very much the case for the companies who maybe have been a little bit lever junkie, over the past 5-6 years when the money was free. And now that you've got this money, coming due, potentially in some part of the world or the market where you have a slowdown, on the top line or profitability because costs are rising. And that's what we are seeing now. On the other hand, I still believe that this is, an opportunity, obviously, for people involved in the private markets like us. But also, for the situation where you would have to recapitalize, part of this company. And that's true for corporates. It's obviously true, for real estate. It's true for any part of the market that maybe was a little bit, a short memory in terms of how you approach your liabilities and the cost of funding.
It's interesting. You have a significant presence both in Europe and in New York, in the United States. After Trump won the U.S. presidency, what was the thinking? Because a lot of investors in the U.S. say, bet on America. This is a pro-America trade, especially with the tariff policies. It could really impact Europe in a very negative way. Do you agree with that line of thinking?
Well, I'm certainly hearing that, but, being a foreigner myself, as long as you can get into the United States. So we'll see, how that plays out. But, on a more serious note, clearly we see that these economies, taking Europe, Asia, the US, the Middle East, I'm just back, from the Middle East, that is, driving force of the overall part of the business, we're in. We see that effectively now investors are taking less of a global holistic approach than a very specific market, focused allocation. So, yes, there is a Trump trade, and you commented, at length about that. But I also think that we should keep, on a relative basis, what type of risk you're taking for the return. What we do is relatively simple. That's what our investors, our asset allocators and asset owners, are asking us to. And effectively having a global platform makes us, a more relevant, I think, proposal.
Between the differences you're seeing in interest rate policy potentially moving forward and a new political regime, how is it changing your decision-making around how you're investing?
Well, first is the underwriting base case, Are you underwriting for a 5, a 10, a 15, a 20%? Because effectively, once you factor in this new, cost, as I said, of the risk-free rate, the cost of liquidity. Speaking about real estate, we know that the capital is not as available, as it was maybe, 10 years ago. And so all that is waiting, in some part of the market, which for us is the great entry point, when you can have this flexible allocation. So, I will not comment on the public equities market, which is not really what we are focusing on, but just as an outside observer, certain things don't really add up as far as I'm concerned.
Speaking about things adding up, there was an amazing story that crossed the Bloomberg terminal right before you had sat down. The Bank of America Tower, the Brookfield Tower, the decline in appraised value has dropped by 69%. At the same time, you hear big companies like Blackstone saying that maybe real estate prices have bottomed. What is going on underneath the surface?
Well, real estate is two things. One is, leverage that you put on an asset that at times is perceived as a very safe asset, and then it's the supply demand. And we know that because you cannot offload real estate the same way you can offload, public equities, there was a backlog of supply, to effectively hit the market. So that has somehow normalized in certain part of the market, but the new money coming in is still relatively thin. And that's where, the repricing is taking place. The debt is not as abundant as it used to be. And so now we like it at Tikehau a lot. I mean, not only the commercial real estate, but the whole real estate play, is one that we like because of these fundamental dynamics.
Are you catching a falling knife, though? Do you worry at all that if rates do stay high, that you will see more pain in the market, more than people are talking about right now?
You want patient, long-term, flexible capital and be able, to effectively price, the underlying risk that you are taking. Right now in the real estate market, it's very hype around, the data center, for obvious reasons that you are commenting, every day on the program. But the more traditional, like over the weekend, I was, touring a hotel here in Manhattan because, we like effectively the lodging part. We love the resi play, both in the US, in Europe. So you cannot approach that with one big brush.
Now, we started this conversation by saying you're here celebrating the 20th anniversary for your company. Yep. When you think about the next 5 years even, how are you thinking about expanding? A lot of people are forming partnerships in your space. Are you even thinking about mergers and acquisitions?
Yeah. Yes, well, the Tikehau journey has been not only a very entrepreneurial journey, but also, a journey with a lot of partners, along the way. So we've had this culture ever since we started 20 years ago with 4 million euros of AUM, right? So you need friends when you start, with such limited resources in our industry. And, today, as we enter, maybe not the next 5, but the next 20 years, I'm already, thinking 20 years forward together with my partner, Antoine Flammarion. And, we're at a time where our industry is effectively consolidating, where the big platforms are becoming bigger. Obviously, the retail play that many of you are discussing quite often is at the center of the growth, for people like us. But we still have a very significant runway for organic growth at Tikehau. We expanded in Asia, in the Middle East, here in North America, and despite being born in Paris, which is actually still okay, will be a great local guide for many global investors. M&A is obviously a big topic. Almost everything is up for sale. You know that, right? I mean, small, medium, large. If it's not an IPO, there are some very large rumors, that you comment from time to time here. So there will be some consolidation, some succession, some next generation, and I think it's a great moment to build what will be the winners in the 2.0 alt asset management industry.
It's like Jane Fraser said to me, game on. When it comes to M&A, everything is up for sale. Mathieu Chabran, of course, co-founder of Tikehau Capital. We thank you for joining us here in New York.